Employers must pay and report taxes on behalf of employees to avoid penalties and fines. This section of the law requires employers to report and pay these taxes on behalf of their employees. The legal obligations of employers in the United States have a legal duty to withhold and pay certain taxes on behalf of their employees. These taxes include income taxes, Social Security taxes, Medicare taxes. These taxes are withheld from employee wages and paid to the government on behalf of the employee. The consequences of non-compliance, failure to comply with these tax obligations, can result in severe penalties and fines. According to 26 U.S.C. Section 7202, an employer who willfully fails to pay or withhold these taxes can be subject to a fine of up to $1,000 for each employee. Additionally, the employer may also be liable for the amount of taxes owed, plus interest and penalties. The reporting requirements: employers are required to report and pay these taxes on behalf of their employees. This includes filing Form 941 with the IRS to report employee wages and taxes withheld, paying the taxes owed to the IRS, providing employees with a Form W-2 to report their income and taxes withheld. The importance of compliance with tax laws is essential for employers to avoid penalties and fines. It is also important for employers to ensure that their employees receive the taxes they are owed. The consequences of tax evasion: neglecting tax obligations can have far-reaching consequences for employers who willfully evade their tax responsibilities. These consequences can be severe and may include civil penalties. The IRS can impose significant civil penalties on employers who willfully neglect their tax obligations. These penalties can include fines, interest, and penalties on the unpaid taxes. Criminal penalties: employers who willfully evade their tax responsibilities can face criminal charges, which can result in imprisonment, fines, and other penalties. Loss of business licenses: employers who are found guilty of tax evasion can lose their business licenses, which can severely impact their ability to operate their business. Damage to reputation: tax evasion can damage an employer's reputation and lead to a loss of customer trust and loyalty. The legal framework: the legal framework, the federal tax code, specifically 26 U.S.C. Section 7202, provides the legal framework for tax evasion. This section of the code states that any person who willfully attempts to evade or defeat any tax imposed by this title shall be guilty of a felony. Key provisions: willful evaders. The term willful evader refers to an individual or entity that intentionally and knowingly evades their tax obligations. This includes not only the person directly responsible for the tax payments but also those who have the power to make decisions that affect the employment tax obligations of the business. The duty to ensure employment tax compliance: the law requires that any person with the authority and ability to ensure employment tax compliance takes steps to ensure that the business is in compliance with employment tax laws. This duty is not limited to the person directly responsible for tax payments, but also extends to those who have the power to make decisions that affect the employment tax obligations of the business. Key players involved: business owners, executives, financial officers, individuals with authority and ability to ensure employment tax compliance. The consequences of non-compliance: failure to comply with employment tax laws can result in severe penalties and fines. The IRS may impose penalties for failure to pay employment taxes, failure to file employment tax returns, and failure to pay estimated tax payments. This concept is often misunderstood, and its application can be complex. Understanding the concept of willfulness: willfulness is a critical component of tax evasion charges under the Internal Revenue Code. To establish willfulness, the government must demonstrate that the individual acted with a deliberate intent to evade taxes, despite knowing their legal obligations. The IRS also relies on the whistleblower program to identify and report suspected fraud. Whistleblowers can receive up to 30% of the amount recovered. Our team of experienced attorneys is dedicated to protecting the rights of taxpayers facing IRS scrutiny. The burden of proof: the IRS must prove willfulness in criminal tax investigations, a standard that can be challenging to meet. The burden of proof lies with the government, and it is not a light one. The IRS must demonstrate that the taxpayer intentionally and knowingly evaded taxes, or that they recklessly disregarded tax laws. The complexity of tax law is notoriously complex, with numerous exceptions, deductions, and exemptions. Tax evasion is being aggressively pursued by the Department of Justice. The Department of Justice has taken a more aggressive approach to enforcing the tax laws, resulting in a substantial increase in prosecutions under this section. The rise of prosecutions under 26 U.S.C. Section 7202. The Department of Justice has seen a significant increase in prosecutions under 26 U.S.C. Section 7202 in recent years. This section of the Internal Revenue Code deals with the willful failure to pay or underreport income taxes. The law is designed to prevent individuals and businesses from evading taxes by intentionally failing to report their income or paying their taxes. Key facts about 26 U.S.C. Section 7202. The law is a felony offense, punishable by up to 5 years in prison and a fine of up to $250,000 for individuals. The law applies to individuals and businesses that willfully fail to pay or underreport their income taxes. The law is enforced by the Department of Justice, which has increased its efforts to prosecute individuals and businesses that violate the law. #The impact of increased prosecutions *The impact of increased prosecutions. The increased prosecutions under 26 U.S.C. Section 7202 have had a significant impact on individuals and businesses. The IRSCI is responsible for investigating and prosecuting tax crimes, including tax evasion, tax fraud, and money laundering. The role of the IRSCI in tax crimes. The IRSCI plays a crucial role in enforcing tax laws and preventing tax crimes. The division is responsible for investigating and prosecuting tax crimes, including tax evasion, tax fraud, and money laundering. Willful failure to collect and remit trust fund taxes can result in a significant civil penalty. Understanding the Trust Fund Recovery Penalty. The Trust Fund Recovery Penalty is a civil penalty imposed by the IRS when an individual or business willfully fails to collect or remit trust fund taxes. This penalty is designed to hold accountable those responsible for withholding and failing to remit taxes on behalf of their employees or clients. The penalty is typically assessed against the responsible individual, rather than the business or employer. The penalty is calculated based on the amount of unpaid taxes, plus interest and penalties. The penalty can be assessed even if the individual or business is not the primary taxpayer. Voluntary Disclosure Program, VDP. The Voluntary Disclosure Program, VDP, is a program offered by the IRS that allows individuals and businesses to come forward and disclose previously unreported income or unpaid taxes. Delays in disclosing tax liabilities can lead to severe penalties, fines, and even criminal prosecution. A disclosure is not considered timely if the IRS has already initiated a civil tax examination or criminal tax investigation. The importance of timely disclosure of tax liabilities. Understanding the consequences of delayed disclosure. When it comes to tax liabilities, the IRS takes a dim view of delayed disclosure. Failure to report income or pay taxes on time can lead to severe penalties, fines, and even criminal prosecution. The IRS views delayed disclosure as a deliberate attempt to avoid responsibility, which can result in significant financial and reputational consequences. The consequences of delayed disclosure. Penalties and fines. The IRS can impose penalties and fines for late filing and payment of taxes, including a penalty of up to 6% of the unpaid tax. Our team of experienced tax attorneys is dedicated to helping you navigate the complexities of tax law and ensuring that you comply with all tax obligations. Understanding the consequences of tax evasion. Facing allegations of tax evasion can be a stressful and overwhelming experience. The consequences of tax evasion can be severe, including criminal charges and penalties, fines and imprisonment, loss of business licenses and reputation, seizure of assets and property, damage to personal and professional relationships. The importance of seeking professional help. If you are facing allegations of tax evasion, it is essential to seek professional help immediately. A tax attorney can provide you with expert guidance and representation, helping you to Understand the allegations and the potential consequences. Develop a strategy to address the allegations and prevent further action. Negotiate with the IRS or other authorities to resolve the matter. Protect your rights and interests throughout the process. The role of a tax attorney. A tax attorney plays a critical role in helping individuals and businesses navigate the complexities of tax law. Our team of seasoned attorneys is dedicated to providing personalized attention and unwavering support throughout your case. Expert representation for complex tax cases. The tax law offices of David W. Classing is a trusted and experienced partner for individuals and businesses facing complex tax challenges. With a deep understanding of tax law and a proven track record of success, our team of attorneys is equipped to handle even the most intricate and high-stakes tax disputes. Understanding the complexity of tax law. Tax law is a complex and ever-evolving field, with new regulations and changes emerging regularly. The Tax Cuts and Jobs Act, TCJA, of 2017, for example, introduced significant changes to the tax code, including new deductions, credits, and exemptions. The Q&A Library is a collection of frequently asked questions and answers about employment and criminal tax law. The Q&A Library is designed to provide a quick and easy way to find answers to common questions about employment and criminal tax law. Employment tax law. Understanding employment tax law. Employment tax law is a complex and ever-evolving field that deals with the taxation of income earned by employees. This includes wages, salaries, and other forms of compensation. The tax law offices of David W. Classing, PC provide expert guidance on employment tax law, including tax withholding, understanding how much tax is withheld from an employee's paycheck and how to ensure accurate withholding. Tax filing requirements, knowing when and how to file tax returns, including the importance of timely filing and the consequences of late filing. Tax deductions and credits, identifying eligible deductions and credits that can reduce an employee's tax liability. Common employment tax law issues **** Common employment tax law issues. Misclassified employees, understanding the difference between employees and independent contractors and how to classify employees correctly. Unpaid wages, knowing how to handle unpaid wages, including the process for filing a claim and the potential consequences of non-payment. Tax audits, preparing for and responding to tax audits, including how to gather documentation and what to expect during an audit.